Greetings all, this is Adam. I am here to bring a lot of content, not only in this video, there's a lot that I would like to cover. It's going to be a little bit of a longer video, and then the ones to follow will sort of be supplementary, covering various topics that not only I find important, but also what you all find very important. I kind of want this grouping of videos to serve as a kind of a start to finish beginner's guide. I know several people have done things like this. Mans has a ton of great guides. I mean, there's countless hours of great YouTube videos out there, but I kind of wanted to put together some of my own and just take this week to really dig into that. So, I asked. There's a lot of topics that were requested, so I'm gonna try to get through a good amount of them. But at the same time, first thing I want to do is go through my own watch list process for Monday. I'm just gonna make it right here, and I'm gonna talk through the thought process, and then after that, I'm going to take some of these topics from Twitter that were requested. Got several in DMs too, so I want to try to get to everybody hopefully at some point this week. So to start, I kind of want to give a market overview. First thing I'm always doing is I'm just looking at SPY. I'm saying, okay, what levels are there? Is there a certain trend? And honestly, I'm just going to go to SPX because I have too many lines on SPY to really see what's going on. So here, this level is very, very, very key, right? I mean, honestly, I'd probably move it down to about here. If we go to the weekly, honestly, it's probably where we should start. So I'm noticing there's this greater head and shoulders pattern, right? Right here, head, shoulder, a lot of upper wick on this one, higher volume. So it did get pushed down significantly toward the end of the week, particularly Wednesday, Thursday. This candle right here was a little bit concerning. However, it did hold support, and then we do get a nice push back up from the Friday candle, looking like a nice hammer there. Good volume on the candle. I mean, it's just been this slow, low volume. Right here, these three candles right here were pretty soft. I mean, they basically went straight up, but from a volume perspective, I mean, it's pretty low relative to all that was going on here. And to me, that's saying, once we actually do get the influx of volume again, that's where we'll probably see an aggressive move. And I always say, the more steep the trend is, because you can see, there's a pretty steep trend here, and we do keep it held for a while. And we actually did hold the trend technically on Friday. So, I mean, the steeper the trend is, the more aggressive the opposite of the trend is going to be, right? You can think every action has an equal and opposite reaction, right? So here, we have this parabolic trend, which would lead me to believe that once it does finally break down, it could, I mean, if this happened in 11 days or 12 days, then the downfall could happen in 5, right? The backside of the trade always happens faster than the front side. But, okay, you zoom out, right? You zoom out and you think, okay, I mean, we could even go to the weekly here. We could say that this is the front side of the trade and then this is the back. That's kind of what I've been thinking to myself. I'm saying, okay, well, we're in a pretty steep downtrend. So what happens when this steep downtrend gets broken? Right, a 1 week candle that covers 4 weeks of losses, actually 5. So here, basically 5, back up to SPX of almost 44.60. So personally, here I'm trying to interpret, okay, I'm taking in the greater head and shoulders pattern here. I'm taking into account this big upper wick on the weekly chart. There's clearly some form of indecision going on at this point, and wouldn't be surprised to have an inside week on SPY. I don't know. Either red or inside week is probably my lean, but I'm fine being totally wrong. However, we did get news that Russia and Ukraine are discussing peace. So, being that this is a pretty news-driven market right now, I could reasonably think that we could be very green on Monday. So, so from an overall perspective, I'm thinking, okay, I'm taking this in, which is slightly bearish. I'm taking the wick in, which is slightly bearish. I'm realizing that we did break this downtrend, aggressive move to the upside, which is obviously bullish. And then at the same time, we did get good news, I believe. Unless, just a contradictory headline decides to come out in the next 48 hours, 24 hours. Other than that, I would think that would lead us to be pretty bullish going into next week. And again, the daily trend is pretty intact here. It's a solid look, right? Nice little healthy pullback to support, and then held. So I'll get into the watch list now, but basically every day my thought process after the market closes is I'm just taking in the big picture, right? You don't ever hear me really talk about weekly or daily levels, but I'm always looking at them. It's taking into account there's so many different aspects of a chart, right? Because technically, this is the same as a 1 minute chart. If you look at it, okay, the candles all look the same, right? The patterns they can form different patterns over, they can form the same pattern over different time frames, or you can have an inverse head and shoulders on the 5 minute and then head and shoulders on the weekly, right? It's just taking everything into account and observing all the possible data that's being made available by the market, because we don't have to know what's going to happen next in order to make money, right? We just have to play what's in front of us. So, but the key to doing that, and one of the questions that I wanted to get to today, somebody asked, what's your daily routine? This is part of my daily routine, right? Just taking in the broad picture, observing what's happening from a broad perspective. So I then want to think, okay, sectors. So I've got a lot of watch lists here. These are the spider sector funds. And if I go to index, okay, maybe it should just be called ETF. But, I can look, I'll filter it. I'll say, okay, what am I looking at? Okay, real estate. I've actually seen a good amount of people talking about XLRE. But, okay, ARC had a 2% day, surprising. Utilities, small caps, materials, staples, energy, healthcare. So, it was not a tech day, right? XLY and QQQ, financials were down, right? So, and then particularly semiconductors, right? Semiconductors had a terrible day on Friday. So what I spend my time thinking of when I'm putting together a watch list is, okay, I'm acknowledging the sectors. Okay, I'm seeing what was strong and what was very strong, what was very weak, and I generally try to pick. I'm focusing on 5 stocks, right? But I try to pick things that vary from different sectors, right? I'm not just going to pick 5 tech names. I would love to do. You can see my Friday watch list was Microsoft, J.P. Morgan, Nvidia, Upstart, Chewy, right? E-commerce, finance, which nobody knows what Upstart does, and semis, financials, and their tech name. It's kind of hard to avoid the tech names, but usually, a pretty good. It doesn't even have to be a sector, but financial services whether it be something like Upstart, PayPal, Square, SoFi. Um, those those have been moving pretty nicely lately, just good range. Just finding the stuff with range, right? If and I'll give you an example. So Nvidia was chopping, right? Nvidia was chopping all up here, was not worth playing. You see semis, for from the 22nd to, I don't know, that's pretty good action right there. 22nd to the 30th, maybe, just kind of got choppy. And you can look, Apple was still moving, right? It wasn't like the market wasn't moving. It just, semis just weren't. Um, so you kind of have to take that into account, right? Like example here, the range is just low. There's not much range, here, 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 right? Banks right now, like this is great movement. But you just have to acknowledge what's moving and what's not, right? For me, I kind of try to find this balance of, okay, I want to pick some things that have been a little bit stagnant and then try to catch them when that big move happens, because those moves are gonna, those moves can really pay. Like here, this may be chop, but if you caught this day, right, when it finally broke out of the chop, I always like to throw in a couple, like, okay, this has been a sector or a bucket of stocks, that has been moving, pick out a couple of my favorite setups. Um, if so, for example, um, if I'm leaning, the best setup may be a bearish setup, so say semis, for example, Micron looks significantly worse than Nvidia, right? Which it actually, I believe it does right now. AMD, I mean, they all don't really look that great. AMD, see, this is just not really good to play. I mean, this one maybe here. I don't know, just a lot of wicks. Just it definitely makes me avoid it. But this is good, right? So I always try to get this mix of, okay, it's near a breakout, so I can just put a breakout or breakdown. I can put the levels as the breakout or breakdown level, and then play that if it gets there, and then also have, 2 or 3 that have proven in the past, 4 or 5 trading sessions that it has good range. Usually that's where I try to focus myself. Like Neo, for example. Neo's been moving great. These look a little bit choppy, maybe with the wicks, but the intraday movement is still there. I mean, this is a rather large, $2 candle on a, top to bottom, a little less than $2 on a $20 stock, right? It's about 10%. So I think I do like Neo. Interested to see how Russia news may impact Chinese stocks. Not necessarily. I don't know. Might not be anything crazy there. But if you look, this is maybe could be considered an inverse head and shoulders, and you get into this very nice volume profile gap up to about 23.9, 24. This could be a very, very solid move for Neo. So again, what I'm doing is, just scanning these sectors. I mean, first thing I'm doing is looking at the ETFs, seeing what moved. Then within semiconductors, for example, I'm saying, okay, well, maybe Nvidia looks more like a better bullish setup than bearish, because it runs into this 265 level ish with, pretty rough profile to get through. It already supported there, so I'm leaning more bullish there. Now here, you look, and I'll ditch that. You look at Micron, and Micron, obviously this is a way better bearish setup. So if semis are bearish, below this 75.15 level, you get into a lot of trouble on Micron. I mean, 70 can come very quickly. So even though they're in the same industry, you can get very different setups. So, I like to have varying, okay, well, I love the bullish setup on Neo, love the bearish setup on Micron. Try to really get in some bullish focused, some bearish focused, just kind of really have variance. Again, it's all about taking in as much as possible. So, I'll take in the daily, I'll take in the hourly, take in the 15-minute. And I'll get into that later. However, to wrap up sort of my my daily routine, right? After market, I'm just SPY, QQQ, ETFs, sectors, then just going chart by chart on basically the daily. Really taking in as much as possible to try to get a feel for how things are moving in the certain industries. So as far as morning goes, I'm looking at the strength of sectors. Same thing. Looking at it, typically it consists of me looking at SMH or Van Eck Semiconductor, ARC, and then all of the spider sector funds as well as SPY, QQQ. Just to gauge strength, right? But that can change very quickly, right? So tech can be up significantly at open, and then boom, it could be relatively weak compared to SPY in a blink. So I do watch pre-market highs, pre-market lows. What has the strength pre-market? I do take it into account, obviously, but I don't let it impact my bias, because at the end of the day, price action reigns supreme over everything. So whatever we see is whatever we get. So now I'm trying not to have too many names that I would consider growth, or things that could maybe, things that are going to go, I don't know, 4% on a, plus 4% on a good day, minus 4% on a bad day. I try not to throw too many big movers percentage-wise in there. I try to keep it, because 2% on Microsoft or Apple is a huge day. So I try to keep it to where the volatility is also something that's regulated. So for example, Ford is one that's not very volatile. However, you can still get really good moves. If I look at the daily chart, Ford has been moving. I mean, top to bottom, right? This is a 75-cent candle on a less than $20 stock, which is a big move. I mean, these candles have had a ton of action. There's a lot. 2% on Ford is honestly a pretty significant move. But you can play. The intraday options movement is great. Ford has been great for the last few months. But this right here, it does look choppy and wicky. But at the end of the day, you can catch these moves, and it proves that there's range, right? Range on a name like Ford with low IV. It can be a very solid setup. Another one that I'm watching, one of my favorite low IV plays is Boeing. So this one's pretty clear, right? It's holding the trend. You can see this trend here, boom, boom. I would think that the upside is probably going to be the more convincing move here. It might be magneted to 200. I wouldn't be surprised if I got on unusual whales and there was heavy 200 call flow, right? It just wouldn't surprise me, particularly with the trend line support. This thing can easily gap. This stock has had a lot of news recently, so interested to see what this thing does. So I will move this down actually. And another one that I saw that I like. So this is I kind of start a new list every month, sort of. Granted, I know this says March and we're in April right now, but just what's been hot, what are people talking about, and I generally start over, so I'm not getting cluttered and really focusing on names that there's a reason I'm not trading them, right? If it's not moving or the sector isn't moving, then I just take it off of my list. I had Spotify on my list for one day and it moved really well, but I probably am not going to play Spotify, so why clutter it? Not going to play Microvision again, probably not going to play Okta again, so I can just go ahead and get rid of them. Probably not going to play Altria anyways. Visa, this chart looks crazy. High volume, big breakout potential, pretty clear resistance right here. And again, there's no significance to the color of my lines, because I just don't take them off the chart unless they get in my way. So you'll see varying green and red lines from the past. But I really like this chart a lot. A lot. So I'm going to add V to the bottom. Now this looks like a really solid list. I think I'm a little bit over on low IV names. Being Ford, Boeing, and Visa. Probably gonna not take Ford, and I'll find another tech name. So I've got Neo, Micron, BA, Visa. Right, this would be a bullish, biased play. I mean, I would prefer it to be bullish. However, if we get this bearish, breakdown, 220 is imminent, right? Especially with this profile, gets pretty easy. I mean, you get under 223 and it's going down the hill really quickly. And that would honestly be healthy for this thing. So I would be fine playing this in either way. I don't really necessarily have a bias, but it has a firm trend, and I can reasonably conclude that there's going to be a significant move. That's all we're looking for. Like, we just want to hopefully pick a time when we're not going to get one of these candles. We just pick a time where we're watching this when it has a big range candle, right? Support, possible break of support. This one will probably, I wouldn't be surprised if it's an inside day, because Friday was just absolutely terrible for Micron. Closed in the middle. Probably going to be an inside day of consolidation. And then Neo, obviously this is honestly a similar setup to Visa. Sort of, but holding a strong uptrend. Obviously the bullish side with the bounce looks really nice, but I'd be fine with the breakdown too, because it could get ugly pretty quick. But as far as quality of the setup, bullish is in fact better, at least in my opinion. So I've got payment, I've got finance, I've got industrials here. I've got semis, I've got EVs / China exposure. So I want to pick one more, another tech name, maybe Facebook. Haven't played Facebook in a while. Inside day. Oop, yep. Inside day and close right in the middle. Yeah, I love it. So let's get Facebook down there. Okay. So now we go in and just make the levels, right? And again, I pretty much understand where the levels need to be, having played these names countless times. I'm used to the ranges and just familiar, right? I try not, I honestly don't really branch out that much when it comes to new names, just because if it's not broken, don't fix it, right? There's a lot of really good movers right now, and you can legitimately, I know people who play NVIDIA every single day, totally can. So I really like these levels on Neo. It's pretty clear. If I'm looking at the 15-minute, boom, get the tops here. I don't love the that this doesn't really get that much agreement over here. Red line looks great. It's not screaming that it's great for calls. However, I'll go to the 5 just to see if it can give me any more data. A little bit better. I do like that it's 22.25. I obviously round to the next 5 cents, but usually, but on something that's obviously cheap, Neo, you kind of need to take every cent into account. But I would go with 22.25 and 21.60. All right, so then we get to Micron. I mean, this thing has been on a tear. I mean, they actually had great earnings and gave up all their earnings gains. So here I'm thinking, okay, my range is probably, $5. So I mean, a dollar 20, $1.10 away. I like, yeah, I like this right here, which puts me to about 77.30 ish. Might go to the hourly chart for this one. Yeah, the hourly is going to tell a better story. I don't love the fact, okay, 77.25. It doesn't get perfect agreement over here, but I do love this. Let's see if I can get a little bit more. Maybe I need to drop it slightly. And since it's a call trigger, I'm more, concerned with making it higher than necessary because I don't want to. A lot of people ask, like, how do you prevent fake outs? Like, I mean, you can't. You legitimately can't. It's part of the game. All that you can do is take your position as close to the level as possible. That way your risk is very defined, right? If you take calls over 77.25 and say it's at 77.30, goes right down to 77.20 or 77.15, you cut, right? Your risk, if you enter at 77.50, right, then by the time it gets back down to 77.25, you're already down about 10% probably or more, and you think to yourself, oh my gosh, well, this is where I ideally should be adding my position, and in the first place, whichever way you choose, and not base borderline stopping out, right? So what I always say is, how to best avoid fake outs. Number one, you can't, and number two, make sure that your risk is extremely well defined. If you enter as close to the level as possible, I mean, you're not going to blow up just by taking a position, and then it invalidates your thesis. You have a thesis. This is my reward, and more importantly, this is my possible risk, and follow that thesis. So if it invalidates it, then boom, right? Because if you don't have a thesis, then what is there to be invalidated? And if you don't, if you if you don't have a thesis in the first place, then you'll never really have that defined. Oh, I need to get out right now, right? It just makes the whole process more difficult. So here, for puts, I'm gonna go with 77 or 75.10. Can I move it down? Oh, nope. 75.10. Yeah, I like that on the hourly chart. It's a good look. So pretty straightforward there. Then BA, we're actually going to utilize this trend. I'll make it white. I really go through different color phases with the lines. So BA, I mean, range-wise, there's a lot of wicks. That's the thing. This thing will be really jumpy. You just have to be careful because the premiums move fast. I mean, this is not a very the implied volatility is fairly low. I think it's like 30-40% usually. But for the way that this stock moves and how jumpy it can be, you just got to be really careful. From my experience, I mean, you can get bagged pretty quick on this one just because of the way that it moves. And like, honestly, you can't control it a lot of times. So it's just kind of the nature of it. And again, that's what happens when you play certain stocks a lot. You realize, oh, okay, well, I do like this personality. I don't like this personality. You learn and teach yourself how to play it best, right? Some stocks are, never, ever, ever buy calls in a green candle on some stocks, right? Because you do that, you're guaranteed that it's going to, basically, if there's a stock that retraces every move, pretty much, Micron is one of those, at least for me. I don't ever buy Micron calls on a green candle. I wait for a red candle every single time if I'm going to buy calls. Now, it can just get the rug pulled out from underneath it. So when playing puts, it's a little bit different, like you saw. I mean, it flushed, totally flushed on Friday. There was no bottom in sight. But just understanding certain names, saying, hey, like, this one will retrace every move. But then there's one like Nvidia, right, where, at least for me, sometimes it just goes, right? Upstart's one of those. It just goes. It doesn't necessarily care to retrace the move, but some are more choppy than others. Even within the same sector, it's all about the way that you interpret it. And somebody might comment, "Oh, well, I think Micron moves great all the time. I love chasing it." I was like, okay, that may be how it treats you, but we all interpret things differently. Just like patterns, we interpret personalities differently. So for Boeing, I like these levels decently. I mean, again, the levels aren't going to be perfect, which is why I'm using more of the hourly, because I know that the wicks are all over the place and it's jumpy. And on the underlying itself, there's a decently wide spread, I think, probably 15-20 cents. So somebody buys, and it could jump 15 cents in one tick. Upstart, for example, will jump 20 cents in a tick, right? It's just the way of nature of it. And so when you're playing options on something like that, the options jump exponentially off of the already wide bid-ask spread on the underlying. So Visa, I actually haven't played Visa in a long time, but it's been a very popular name. So about $1. Been a popular name. I mean, this chart looks incredible. Looks really nice for reversal here. Probably gonna. Oh, actually, I want to move that one back because I like that level. I want to make sure I know where it is. If there's a level that's very significant to me, on the daily or weekly, I know a lot of people do that, and then they color code them. That's a really great strategy. Somebody mentioned that in the comments as well. Color coding, white would be weekly, daily levels would be red or purple, and just going back in time. That's a really good strategy to use. I don't do it, but if it's a significant level, I just put it on there, put it on the chart, and maybe I'll make it, white if I think it's more significant. Another question after I do these levels, another question I'll talk about is what's the difference between a key level and just a level? I've been getting that question a lot recently, so I kind of want to give my 2 cents there. This one's pretty cool. I mean, 225, super round number. Here, I'm just taking this wick into account. It's kind of all I really need, I think, personally. It'll respect it. Okay. So yeah, I like these decently well. Yeah. Again, it gets choppy. It gets choppy in here for sure. But it works. Now, Facebook, we had an inside day, so we can reasonably just play the inside day, inside breakout. So we can do, just low of day, high of day, and move on. Pretty straightforward right there. But that's probably the way that I would approach this play. Just going with high day, low of day. Just the typical, inside day being, the daily candle from Friday was fully encapsulated by the previous day, Thursday. And sure, Friday sort of had a pretty big range. I mean, it was about a $6 range. So it's just because that Thursday candle was so big, that honestly anything would have probably been an inside day as long as it didn't gap down, since it closed, I mean, near low of day. But I mean, it would have been pretty hard to not be an inside day on this candle, right? Pretty big candle. Actually, it wasn't really that big. But I see this consolidation. I like it. For those who aren't familiar with playing inside bar setups, typically the most common way to play them is just take the inside day, which would be this, inside day after this bar, and then just play the breakout over high day or low of day, which is really nice that it actually closed right in the middle. So we have a pretty much equidistant range, top to bottom. So, last thing I want to talk about is what makes a level different. And I'm not doing anything else on the screen, so you won't see me moving my mouse. What makes a level key versus versus just level is kind of the way that it's been asked. But I get what you're saying. So, everybody talks about key levels, right? Well, what I would say is, ask yourself what makes something more trustworthy, right? What am I doing on these charts? Scrolling back and thinking, hey, this has a lot of agreement. This, what I'm saying, I don't love this level, but it works for now based on recent trends, based on recent support resistance flips, right? The more agreements, the better. So if I get something that really, it agrees on the 15-minute to me, and I get a few matches, and I scroll back a couple days, and I get a couple more, and both, or I get both support and resistance usage, and flips. That to me speaks wonders. And then if I want to add to that, I go to the hourly chart and say, okay, let's see what's happening here, and boom, it's also confirmed in the hourly. If it's number one, a lot of data points over time saying the same thing, right? And then you also get support and resistance usage, different flips, and then also across multiple time frames. That in my books is what makes something that's what makes something key, right? Because for example, if you can't find a good level on, say, Micron, and you say, well, there's not much agreement over time. Like, sure, you can find levels. Anybody can find levels. I mean, you can find a place where two candles match and say this is support, right? Sure. But what makes something more key is, that constant agreement over time, and then also the time across multiple time frames, right? And it's rare that you'll find a level that's like, oh wow, this gets respected on the daily, hourly, and 15-minute. Like, you're just not going to find that. And honestly, it's hard enough to find ones that agree on the 15 and the hourly. But if I see something with a lot of wicks, I'm probably going to go to the hourly. Just like Boeing, Visa. Honestly, they just have less. They're less liquid to begin with, or just lower volume. So what makes a level a key level? For me, that's sort of the thought process. But right, you can have as many levels as you want on your screen. Like, for example, a lot of people don't like to have a lot of SPY, a lot of lines on SPY. Why? Because it can clutter your vision. You can say, well, if I'm marking something every 20 cents, which you can find a level every 20 cents if you wanted to on SPY. But which ones are key, right? Which ones get the most agreement? Which one are usually, for me, like daily, 4-hour, hour levels, right? That get that agreement over time, multiple times, maybe across multiple time frames. That's primarily what I'm looking for, and I'll make that a different color, right? But I still respect and mark, the intermediate levels that maybe aren't as crazy as something like a multiple time frame agreement, and a lot of support resistance flips tests. You all get the picture. So this is sort of a overhaul on a lot of things that I do and talk about on a daily basis. But for me, I like vocalizing this stuff, and it's important to vocalize it. And it's hard for me to vocalize that via Twitter. I mean, it's just difficult. I think the thought process behind balance of a watch list is very important. I think that there's a lot, hopefully, that you all can take from this. Whether we talked a lot about support, resistance, trends, trend analysis, breakdowns, breakouts, which bearish, bullish, bias, while also taking what's in front of us, taking as many data points as possible, but also not digging too much into one data point. I think that this is I've gone for about 40 minutes now, but I hope everybody enjoys this. There's a lot here. Please let me know what about this video you liked. If you have any remaining questions on any of these topics, please let me know, and I'll try to cover them in the future. Let's have a great week, and let me know what you think about this, and just focus on price action. Be patient, be smart, have a thesis, have a defined risk, and just follow your rules. It's the most important thing you can do. Thank you for watching.